Welcome to the Possible Promise podcast, where we break down the complexities of finance and point the way to financial success. Today is October 4th, 2020, and I am your host, Brandon Oliveris.
And I'm his beautiful wife, Christine.
This is long-awaited episode 16, Finding Sanity in an Insane Market. Welcome, everyone. I feel like I've totally abandoned our listeners. I'm sorry about that. It's been literally, I'm very sorry, 2 months. I just checked.
Wow.
Almost 2 months since our last episode.
Wow.
I'm very sorry. August 7th, I think, was our last podcast, according to what I saw on the blog. So sorry about that. I'm going to not let that happen again.
To be fair, you were busy.
Okay, so I had... And this goes into the announcements I want to make. I had an exam coming up. I took the Series 65 exam, which for those who don't know is what people take to become qualified to register as investment advisors. Technically investment advisor representatives, but no one cares. And so I was just really, really studying for that. And then just a lot of other craziness was going on. But I finally took the test on September 22nd, and I passed it.
The first time.
The first time. I really did not think I was going to pass it. I was so scared.
I knew you would.
Going in, I was studying nonstop. I was trying to, and beating myself up if I wasn't studying.
That's because you always do that.
But I finally took the test, and it only took me. You get 3 hours to take the test. It only took me
hour and a half.
Like an hour and a half. Yeah.
Well, you had 4 hours because...
I had 4 hours because of my visual impairment. They gave me 60 minutes extra. And I even had a reader, this really nice lady who read everything to me and took down my answers. And so someone reading it out loud is even slower than trying to read it yourself, obviously. So
you did it in the same amount of time, though, really.
Yeah.
As your practice is.
Yeah, I did. My practice tests only took about an hour 15 minutes. So I took a lot of practice tests, and I'm just so surprised. Christine wasn't, but
no,
she's not nice.
I wasn't. No, I know
I
you.
know. I'm joking.
What did you? You may have only failed one, like, not even practice
checkpoint
test.
exam
Yeah.
right in the beginning of my studying.
Yeah, so you failed one time.
Yeah.
On something that doesn't really matter.
A really small exam,
yeah.
Like test one. But yeah, so I passed the first time, and I was really excited about that. I'm still kind of in disbelief that it happened. And then that it's done. Like, this exam was my everything. I breathed it, I ate it, I slept it. Like, for
and I'm pretty sure you got more gray hair from
a month and a half or so, maybe 2 months, I just did nothing but this exam. And so now it's done. It's sort of weird that it's done. But now I can go on and register. So the goal is to register Possible Promise as an investment advisor. So step 2 was just completed. We are officially a registered business. So
Yay!
Possible Promise Financial, LLC, registered in the state of Delaware.
Even though we live in Pennsylvania.
Even though we're in PA. But it's better corporate law and taxes and all that kind of stuff there. So, yeah, we're officially registered as of this past Thursday, which was, October 1st?
Yes.
Yes. So that's fun. And next up is just getting everything registered with the state and starting business. So I'm really excited. A lot of cool things coming up, I think. Just wanted to mention that.
That's why we've been in hiatus.
Yeah.
There was a hiatus.
So, I don't know what our schedule's going to be yet. I'm thinking about, I don't know. We're going to see. I'm thinking about every weekend at least. And we'll just kind of see what feels natural. And I promise I won't skip 2 months again. I don't have any other exams coming up in the near future.
You sure?
So.
You sure you don't want to take any more?
I'm positive.
Sometimes I'll joke and say, you have to study tonight.
No. Nope. So so that's all done, and we're good to go, and I'm excited to be back finally. And perfect timing. It's the beginning of October, and the market's been nuts. So before I do anything else, we're going to get into our week in review once I get there. Let me see. Where am I? Here we go.
Somewhere.
Yeah, I wasn't really prepared. Here we go. All right, so it is time for our week in review. So this week has been nuts for a lot of different reasons. I will get to in a second. First of all, we're in a new month of October. September was the first red month for 5 months.
Which is bad? No, good. No.
Well, it depends on your perspective. I mean,
True.
red,
I don't know what red means.
Red means negative.
Oh, yeah. That's what I thought.
Yeah.
Okay. Oh, I wasn't sure.
Green is, positive.
True.
Red is negative. Anyway, so...
Now everyone knows my stupidity.
No. But, well, towards the end of August, I've been calling for it for a while because the market was just getting way, way, way overbought. And it was getting crazy. And so... I watch the RSI. Now, some people don't believe in the RSI, but I do. That's my watch. I'm sorry. I forgot to put on theater mode. Some people don't believe in RSI, but I do. And when the S&P was getting up into the 70s and up and up and up, and it got, I think, a little into the 80s, and I'm like, that's it. It's going to come down.
Well, you knew it would.
I knew it would. And so...
It's like a balloon that's going to pop.
And there are always people, we call them permabulls, who just believe the market's always going to go up. It's always going to go up. It's always going to go up.
How is that even possible?
I don't know. But they exist, I promise. So people saying, oh, the market's just going to keep going up. The economies are recovering. I kept saying it's going to come down. So September was a really rocky month. The last week or two of the month kind of saved us from having a worse month than it would have otherwise been because of who knows what, stimulus hopes and all sorts of stuff. But there was still a drop in every index, a multi-percent, several percent drop in every index. So it was just a really ugly month. It was much, much needed, though. I mean, now the RSI is at a much healthier level. The S&P is hanging out, in the 3300s now. Let's see, where is it now? I don't remember where it ended. It's like almost around 3350. So, still, I mean, to me, that's still kind of high, but it's at a healthier level than where it was. It was over 3,500. So, I mean, I think, I don't know what October has in store. I mean, the election's coming up, earnings are coming up, Trump's in the hospital.
Yeah. Surprise!
Although the futures, this is Sunday night, we're recording this, the futures don't seem to care. So the futures were green tonight. Well, I think because he's doing better, he should be out in a couple days, they say.
I wonder if he had to go to the hospital.
Well, they say he had a fever and was having some shortness of breath and stuff, but they reacted quickly and they say it's going well. But
I guess he'll be okay.
The market definitely cared on Friday. We had a drop of like 1%. But the futures, I think that's as much of a drop as we're going to get. And volatility is contracting, which I think is even a bigger sign. Volatility just means, volatility, as I've said before, is the kind of the fear gauge.
Yeah.
Right? And so if volatility is going up, it means people are more fearful.
Okay.
Contracting means it's going down, which means that people are less fearful, even though, everything that's going on, he's in the hospital and whatnot.
Sorry, I didn't know what that meant.
No, it's fine. So I think people are kind of optimistic that everything's going to go fine. And,
Well, hopefully he'll take, not to get political, but I'm hoping he'll take things more seriously.
Take things more seriously? Yeah, I don't know. We'll see.
Yeah. Not that the market's going to give a crap about that, but...
I have no idea what the market's going to think. I have no idea. So we had some good mixed economic signals this week, which I'll talk about in brief. Consumer confidence was a big. It was far over estimates. So it was, let's see, 101.8 versus an expected 90.0. So that was way above expected. So the consumer confidence is just how much people are feel free to buy and sell and spend money basically. So the big thing that, and this kind of, it was above estimates. The annualized GDP that came out Wednesday, this was above estimates. But I saw this and I was like, wow, this either I'm reading it wrong or this is really big. Expecting a contraction of, let me see what it says, a negative 31.4% contraction in the GDP this year. It's annualized. Better than the minus 31.7% expected.
Oh,
but
good.
By what,
no?
3 tenths of a decimal point. Just 31.4% contraction in the GDP. I guess it's to be expected with everything that happened this year, but that's wow. Jobless claims this week were better than expected, still high, but 837,000 versus 850,000 expected. So that was good. California is apparently not reporting claims for a couple weeks because I don't really know why. I think
because they're California.
No, I think they had some issues with reporting, and I don't know.
I'm kidding.
I saw it and I forget, and I'm not going to look it up. Unemployment rate dropped to 7.9% from an 8.2% expected, so that was good news. Bad news was the change in non-farm payrolls. We added 661,000 jobs, but they estimated 875,000 jobs, so not nearly as good as expected. So the news I've heard lately is just, the economy is starting to recover, but it's sort of starting to stall out. There's still a lot of unemployment claims every week, still a lot of people losing their jobs. The jobs being added aren't as much as we expected or as we hoped. So that's kind of the fear right now. Some indicators are positive, a lot are negative. It's just kind of mixed right now. So people who think that it was going to be a V-shaped recovery, I just still don't see it. I think that we had a quick, the 5 months of the market improving, priced in a huge recovery and everything going great. My expectation is that the next few months and maybe the next year even will be more sobering, and that the market will have to price that in. And I just don't see how such a hit to the economy can't have more of an effect. I think it's starting to. That's what we saw in September. And, it's starting to have an effect. And that's what we're going to talk about today. So we had, I'll introduce him in just a second, but we had a guest on. Now I feel bad for this poor guy because we recorded it last month, okay? A month ago. This interview, I don't know if we called it an interview, more a conversation. Discussion. And the topic was finding sanity in an insane market. And I think it's still just as relevant as today as it was a month ago. But a lot of why you want to discuss it is because stocks were getting such crazy valuations. The market was way overbought. I think it still is to some extent in the long term. But people were just buying everything up. And there wasn't anything behind it. It was all just hype. And September was more sobering, I think. And I would expect personally that the next few months to a year would reflect that even more than it has been. So, I think it has to reflect the economy to some extent. And with things going on with the recovery stalling a bit, I think that'll happen. So we'll just have to see what happens. But as for this week, like I said, kind of been a mixed indicators. We'll just have to see what happens. So that leads me into our topic. Finding Sanity in an Insane Market. So what I'm going to do is I'm going to... this is recorded, so I'm sorry if the transition's not super great. This is the first time I've done an interview like this, so we pre-recorded it, and that will play, and then I'll come back at the end to close us out. But we're on with... His name is Jean-Christophe. JC, he goes by, because a lot of people get his name wrong. But he's the owner of this really awesome Facebook group that I'm in, Options Trading 101. I think I mentioned it in the interview, but I don't remember, so I'll mention it now. So check out that group if you're not already in it. And so we're going to talk about the market and just how crazy investors have been and kind of how to protect yourself. So we'll get into that now, and then I will come back at the end and close out. So I hope you enjoy our interview. All right, so we're here with JC talking about how crazy the market has been lately. Thanks for joining us. I'm super excited to have this discussion. I've been looking forward to this for quite a while now, so I really appreciate you joining us.
Oh, thank you. Thank you for having me. That's a pleasure to be here, and thank you for inviting me there.
Oh, always. So, yeah, we're just talking about the market and how, well, insane, as the title says, it's been lately. I was thinking back to, I don't know how long, a couple months ago, when the S&P was struggling to get up over 3,000 and thinking, like, that's a good place to short it. 3,000, exactly. That's the place to short it. There's no way it's... And then...
That was the same.
Yeah.
That was the same, honestly. That was so bad. When it was around 280, 290, I was like, this is it. This is the moment where we need to short. And I was saying, we should short it in the group.
Oh, yeah. And I had seen analysts say, like, this is going to be a huge point of resistance. It kept getting sold off around that point. There's
exactly.
No way it's going over. And then it did. And then I'm like, okay, well, now, it won't last. It'll go back down, and then it just keeps climbing and climbing and climbing. And it's already up, like, I don't even know.
Now we're back at the point the late, in February, just before the sale.
Yeah, exactly. And already this month, like, we're up, let me see, several percent. I know the NASDAQ is up like 6% this month, and we're only halfway through the month.
That's mad.
4%, 3.9% for the S&P. At this point, this is being recorded on August 22nd. So at this point, it's up already 3.9% for the month.
Yeah.
And I mean, above, and we thought, I remember back in January and February, everyone was saying, the market is frothy here. It's too overbought. It's, there has to be a pullback. And that was before the pandemic.
Yeah. Yeah, no, I agree, because I remember that back in January at the beginning, I found that the markets were becoming more and more volatile. And it felt like, I remember there was a point in February, like very early February, where the VIX came up to 18. And I didn't feel like as confident as trading, as usual. And I decided to lower my positions, the number of positions that I had and everything. So I really made it at the right moment that the VIX started to come up. Like, I think it was around mid-March where it really became intense stuff. That was crazy.
Yeah, it's nuts. And then, everything just the floor fell out from under the market.
It exactly did. Like, that was really good.
Yeah. It was, I mean, I remember those moves. I mean, 7% in a day. We haven't seen that forever, but
that was quite intense because, I think that for a lot of people in the market, it was the first time where we would assess to something like this. We never had a week where the S&P, I think it fell like 35% or something.
Oh, yeah.
And, we never had that, like, as a generation who arrived on the markets at a certain time after 2008, 2009, I've never known this. And, I'm still very young in my investing journey. And that was the first time I actually experienced this, not only from, like, the spectator, but also trading wise. And it it makes you realize that trading small is a good thing.
Oh, definitely. Did we even have? I wasn't trading in 2008, but I don't know if we had those sorts of big daily or weekly moves like that, or was it more of a progressive thing? Were you trading back then? Yeah, you
No,
were,
no,
right?
no.
Oh, you
No,
weren't. Okay.
I wasn't training like in 2010. I started training when we were I think around 2014, 15 or something like this.
Yeah.
So I never knew like such a sell-off.
Oh, yeah. I know in what was it, 89 or 88, whenever that what do they call it, Black Monday or whatever it is.
Yeah.
I know that was a huge fall, down, but in 2008, I don't know if it was so fast, but this was like unprecedented. I mean,
That wasn't fast for at least when you can see from the charts. For example, if you
yeah,
just look at the charts, it seems like it was also not only, it went down a lot, but it was also long. It was also on a very big timeline that it went
right,
down.
right.
So, yeah.
Yeah, and just the rapidity of this. I mean, it fell, like into the bear market, down 20%, down 30%, and then just, I mean, hit off the March lows and just, I mean, out of control for no reason. Like, I mean, and I get vaccine news and I get all that kind of stuff, but it just seems, I've been saying, especially recently, like what's holding it up? I mean, I get the liquidity from the Fed, I get all that stuff, but it just seems like just empty right now because there's not even a lot of vaccine news right now. We're just sort of waiting for things to happen. That's not really going to be out for probably till next year. Like there's
Definitely.
still
And
cases out there.
everything that's been around, like the biotech sector, for example. I remember I traded the earnings for INO. And yeah, I mean that was a mistake. That was like a
Yeah,
huge mistake, like of trading something. I mean that went well in the end, but you could see that the volatility of the option prices are not something that you want to trade. They're
no,
not like reliable. I mean, especially for a company that is looking for a vaccine, and that's obviously what is being talked about at the moment. So obviously there's going to be a lot of hype.
right, right. Now, what do you think about? Because one argument I've seen from people who are still bullish somehow is they'll say the market isn't the economy. It's not, which I disagree with, but curious of your view. They'll say, oh, the market can be up even though the economy is doing horribly because the market isn't the economy. They're different.
Well, I'd say it's not necessarily the economy per se in a way that like what you see on the street. I mean,
Right.
obviously the stock market doesn't reflect like all the for example, a certain sector, like the medical sector, for example. And you
Right.
can see that, for example, with the spiders that target different sectors with the ETF. You
Yeah.
can see that the medical sector is not at all the same. For example, with the hospitals and everything, than the SPY as a general thing. So when you have companies like, for example, Amazon, Tesla, I mean, for example, Amazon, who has a huge market cap, or Apple, who are just going up and up and up
Oh
and
yeah.
up, obviously they are dragging the markets. Because,
Yeah.
for example, the XLF is made, if I'm not mistaken, at a huge percentage, like 20% of like JP Morgan or Goldman Sachs and stuff like this. I mean,
Yeah.
I don't exactly know the number on the top of my head, but obviously they drag a lot more because the winners tend to really win compared to the losers. So
Right.
they just drag the spiders up, even
Yeah.
though the economy, on a daily basis is not like that good. Businesses
Right.
are losing money.
Yeah. And for me, what I would say is that it has to reflect it eventually because I know the FANG stocks are doing really well. I think what did I just see the other day? It's like 25% of the S&P at this point.
Mm.
Apple and Facebook and Google and Netflix and all those, like, Amazon make what, like 25% of the S&P at this point, and all the rest of the stocks. If you take out those, I think all the rest of the S&P is down maybe 4% for the year, something like that. So it's not reflected, like it's just in these big, mega cap names that
Yeah.
you see this recovery. I saw someone the other day called a sure thing rally where it's like you get the sure things that
Yeah,
the
I
companies
mean,
are going to do well.
honestly, like, like obviously, I think that on the short term, there's going to be market inefficiencies. That the market is going to go, is going to be overbought, oversold at some
Yeah.
points on the short term, but on the long term, it's gonna come back to a certain average, and it's gonna be smooth overall. But like on the short term, like for example, like the coronavirus crash, like does that crash from, like, for example, when you look at the SPY, 338 to like 221 in the span of a week, is that something that is really also reflective of the situation itself? Because at the time where it fell, it was not even, for example, for the US, that bad in terms of cases. That was actually more when the market came back that it was worse, and still to this day. So that shows that obviously it's not like on the short term reflecting it like completely. There are inefficiencies, and on the long term it will just average, I think.
Has to revert to the mean. Yeah.
Yeah.
I think the economy is the basis of the market, so it has to reflect it eventually. I mean, the irrationality of the market as it is today has to ebb out, so to speak, and revert to actually reflecting what's going on.
Yeah, definitely.
I mean, they say it's forward looking, but I think that even being forward looking, it's not. I mean, there's a huge impact that people aren't really looking at.
I mean, the market, might be forward looking for certain securities, but when you look at, for example, market leaders, like you look at all the big names like Apple, Nvidia, all the market leaders, LMT, and all of this, there is no, forward looking. The information is already priced in. For such big companies, there is just like nothing that is going to pop up like this. I mean, it's already priced in, and you cannot find an inefficiency on the information there. But like, at least you have a certain stability in terms of how the market is going to go. It's not like going to be like, for example, INO, who is like a biotech company that is going to look for a vaccine, and that in a span of 1 month it's going to do 500%, then minus 100% almost.
Yeah.
And at least as a trader who wants to trade in this market, who's doing like V-shaped recoveries like crazy, I mean, I think it's good to stick to those market leaders.
Yeah, I definitely agree. Although a lot of like Apple now over 2 trillion market cap. Prior to the split coming up, I don't know if I told you about that, Christine. They're now over a $2 trillion market cap as of, I think, Thursday.
Okay.
That's crazy.
Like, would I go long Apple right now? I mean, people have been and making tons of money off it, but I would be really nervous.
Yeah.
It's just so hard to find a good stock. And I mean, luckily, as option traders, and I think that's where this can go now, but, we don't have to worry about that so much. But for stock traders, finding a good stock that's not already insanely overbought. I mean, Apple is worth, I don't even know how much higher than it was back
$497 now.
Yeah,
that's mad.
Back in February it wasn't even nearly that high. I don't remember what it was.
That's why I honestly, as a stock trader, it's better to to switch to options. And if you really want to, own that stock or anything, you sell a put that has like 98% probability. Yeah. And, in the worst case scenario, you'll get a sign, and if you're a sign, it's an insanely far strike price. Yeah. So, you're winning in every case. And like, honestly, it's better to do this rather than trying to guess like what is going to go up or down. Like, at least you just sell a put and that's it.
Yeah, exactly. I've been, because when S&P was at or when the SPY was at like 315, like, oh yeah, I'll sell some calls here. Call credit spreads. They got eaten alive. I mean, just absolutely. And so now anymore, I'm like, you know what? I'm not even going to try to guess direction because I'm totally bearish in the long term. But right now, there's just so much momentum. It's like, what's that expression they have? Like trying to pick up pennies in front of a steamroller.
Oh God.
Yeah. It's like,
no, you're gonna get crushed. Like, I'm not getting in front of this. Yeah, my short trades, short direction have been killed. I remember
Yeah,
when it was around the 270, 280.
yeah,
Honestly, that was, all my short position were showing obviously losses, but that's where it's cool to try to at least be neutral delta
right.
wise. If you can at least as most as you can, and at least you have the long positions that were in the green. But obviously, yeah, that sucked.
Yeah. Oh, I was getting crushed for weeks, and then finally I said, you know what? I'm not. I might think that it's ridiculous it's up here, but I'm gonna do iron condors, and or
Yeah,
if you want to do strangles or whatever, I'm gonna do iron condors. I'm gonna be neutral because I can have much wider strikes,
yeah,
and I mean I have an iron condor on SPY right now between like 307 and 354. So like
Wow.
I'm feeling pretty good, and it expires in September 18th. I'm feeling pretty decent about that. Um, especially with it reaching all-time highs now. I mean,
yeah,
heck,
yeah.
it could blow that out in 2 weeks. Who knows? But I'm feeling a lot safer with that than you know a call credit spread or even a put credit spread because you never know what could happen. I mean,
Yeah, and then
yeah,
with the vertical, I mean, you always have that insurance that is like, you know, reducing the credit that you actually take in the first place.
yeah,
And honestly, that's why, selling a put, for example, instead of a put credit spread is a lot better because,
yeah.
you just kill so much of your credit
Oh yeah,
when you're doing a put credit spread that in the worst case scenario, even if you cannot cover the margin in case of assignment, you have literally the day to close the position. And
sure.
if you've been assigned, and there was still extrinsic value, just going to earn money. That's just not fun to do, but you're still earning money because
Right,
the extrinsic value just went away.
right, exactly. And then you
But
could
that's why
just sell
honestly,
it.
like, it's better to sell puts because you can go super wide and then you have 99% probability. I mean, that's great trade like this.
Yeah, because even on the SPY, it's like even like the 310 puts at this point are worth like $3 and some each or $4. It's nuts. There's tons of premium in there.
Wow.
Ton.
Yeah, there's tons of premium in there. So
Well, that's why honestly, it's better for me to rather than, for example, buying shares of the SPY as an ETF.
yeah,
It's better to just sell puts if you're bullish. Like
yeah.
even at the 270 mark,
Oh sure.
you collect like
It's probably still
four.
premium.
That's still a great premium, and you have like so much probability of being right.
Yeah.
And in the worst case, you get assigned at a real price. That's why it's better for me, in my opinion, to go for sell naked option rather than owning the
Sure.
stock, because at least if you own it, it will be at a very good price. So
Yeah, it's interesting. I think Tasty Trade had a recent research piece on that where they said selling puts versus owning long, shares, um, performed better in the long run. Like even regardless of this whole, craziness right now, but over
yeah,
the last like 15, 20 years, whatever, like selling puts, um, as opposed to buying shares performed better overall.
yeah,
So
that for
it's
sure
kind of
that's something that is like cool to do, to have shares. But in the end, if you can just sell puts like this,
yeah.
I mean, why not? Why not? Especially when you have a good credit for it. You know that it's going to pay off. And if it's not, then you manage.
Right, exactly. Yeah, and you have lots of time to do that. I mean, being way out of the money like that, you have time to manage it. So, but yeah,
That's
for
what I've been
me,
doing.
yeah,
The,
that's
the
awesome. For me, just being neutral just has been
yeah.
paying off. Like I'm not going to take a direction on this. I'm just gonna be neutral and have really super wide strikes, and I should be pretty safe.
Yeah, being neutral, honestly, I did a lot of strangles this earnings season when there was like all the earnings, Uber, Microsoft, Intel. That was great to do strangles because a lot of them did not even move one standard
Right.
deviation away. So that was like amazing to trade.
Oh yeah, that's awesome. Um, and then you have these traders, and we've talked about this a lot before, but who, heck, I just saw something on Twitter earlier. Someone I follow retweeted someone who said, and I'm hoping it was in jest. There was no indication it was, but someone basically said, if you aren't making 100% in a day, then don't even bother posting because you're not a winner. It's
Yeah, that's fair. That's a fair statement, honestly. That
yeah,
says a lot. But
that does say a
honestly,
lot. I said,
it's
well,
yeah.
I guess all the professional fund managers are all losers because they're certainly
That's
not.
no, but yeah, that's really like, I mean, I think everyone, thinks like this at some point during when they are into trading, they think that, having 2% a day is something
Mm-hmm.
normal and that you can achieve consistently. I mean, after that, when you lose money, you realize that, the stock market is not going to be as easy as you thought.
Oh yeah, it will. From experience, anytime you have a strategy that you think is foolproof, the market will laugh in your face in short
Yeah.
order. And yeah,
It has a sense
It's
of humor.
yeah,
It's really about, I think also, you can stress test your strategies. Nowadays,
oh
like
sure,
if you think that something is a good strategy, you can literally build a back test if you know a bit of coding, not
yeah,
even like a lot, and you can just start building things like this. That helped me personally tremendously to learn coding and then after that build tools to understand how, for example, option prices were working. I mean, that brought me a lot of knowledge. I think that like that's a very good way of understanding which approach at least you should take. For example, whether buying calls or start selling, naked options or spreads or whatever it is. At least you have an idea of what works.
yeah. That's good because as you know, I'm a programmer too, and I've built tons of scripts that I use on a daily basis just to look for good stocks and things to trade. And I think that's there's so many. This is a perfect time now. I think this is the best time ever for the availability of data. And you'll have to pay for it usually, but the availability of data, it's just everything's
It's insane.
open. Yeah,
Yeah.
and you can get APIs now where you can tie into it with programming and download
That's
all the
good.
data.
Yeah, I've seen, for example, if you go on Kendall, I think that's the name of the website on Kendall, you have so much data, but like also, for example, satellite data. So you can, there are like strategies, there are literally trading strategies that I know a guy is actually trading. He is looking at satellite images that he buys as data from, I think it was this website, Kendall. And then after that, basically based on the pictures of the silo of oil and how high they go, because when there's a lot of oil, the wolves, they are taking it higher. And then when there's less oil, they're putting it lower. And from that, you can basically predict apparently this, the oil price for the near future. So there are plenty of quantitative like strategies that can be used like this. And I think that's coding is something that, every trader should learn.
Oh, definitely. Yeah. I always tell Christine how glad I am that I'm a programmer.
I was going to say, we were talking about this the other day.
Yeah.
How, programming and, this can all really, help.
Be tied together really well.
Yeah.
Yeah, I
Definitely.
love it. I have all sorts of little scripts and things that I build all the time. Just pull in data. I mean, data is, if you have data, that's power. You can.
That's definitely cool, and at the same token, as because you're tempted after that personally, that's like, now I think something or one of my flaws is that, you're tempted to gather so much data that in the end you start being overwhelmed by the data.
Right. Yeah.
You have to make choices between what are you going to listen to or not. Because after that, you're overwhelmed and you have too many information and you don't start taking trades, like quickly. You start taking way too much time.
Right. In the programming world, we call it analysis paralysis.
I love that.
You're analyzing the data so much. You're like, what do I do?
Yeah. That's really it. And for example, right now, I was using a website that is called optionslam.com, and that basically tells you how stock behaved during the last earnings that he had. And that's quite interesting because you see which type of stock basically how they move during the earning event, before and after. And you can see that, for example, the market leaders and everything, they don't move that much. In general during the earning events compared to company like which I talked about earlier, who is obviously looking for vaccines. So there is obviously a lot of hype around that company right now.
Right.
And that's quite interesting. That's called optionslam.com.
Oh, that's awesome. That's a good recommendation. Thank you. Except for, I think Apple was outside of its expected move. That was a
Yeah.
crazy.
I mean, honestly, there are always some
Always
outliers. That
exceptions.
was Apple, for example, Cisco also. Cisco
Cisco,
out
yeah.
of nowhere, that was the one who
I was
ruined
shocked.
my gains because that was literally, I think I've had done some around 14, 15 trades, 15 earning trades, and I had like one loser, and Cisco became the second one because I don't know if you saw the move that it did, it went
Yeah.
beyond my student to standard deviation. That was painful.
Wow. Yeah. That's nuts. And Nvidia was similar, even though they're recovering now, but they dropped at first. Now I think Nvidia is over 500, but that stock dropped at first after earnings, and then just I think sometimes when a stock gets so hyped up, then earnings, even though they're positive, it's like uh, people, I don't know, sell the news. I guess I don't know.
Yeah, I mean, there's obviously just before the event, you can see that the volume is happening and that
Yeah,
the movement starts becoming a lot bigger. Yeah, Nvidia was definitely, I didn't take that one in the end.
I didn't either.
Um, that could be nice to maybe sell a call on this one because it's honestly so overbought.
Oh yeah, yeah,
And
definitely. Yep,
yeah,
yeah. So if you were giving advice to someone starting out, especially in this kind of market, and they don't want to get eaten alive by it,
fair
what would
enough.
what would you tell them? What would be the best strategy you would recommend for someone?
Mm, I think that the very first thing that someone should look for, because I don't know what the person wants, I don't know what they want, especially from the markets,
Right.
if they want to live from it or if they just want to improve their
Sure.
saving or anything. But something I think that you cannot go wrong on is start gathering information from valid sources. So you
Yeah.
know that the information that you're learning is something that is valuable and that you can actually use after.
Right.
Because, the problem is like for someone who arrives in there, there's so much misinformation and just
Yeah.
information, simply put. I think that there's so much information that it becomes very hard to choose between what you should look at, for example, to open a trade and then hopefully make a profit after that. So I always recommend one book that is called Option Volatility Pricing and Strategies. I think that's called that way, like this, and
Mm-hmm.
that's written by Sheldon Natenberg.
Okay.
And I'm gonna look up the name of the book because this is honestly so important. That book
Sure.
that teaches most of I'd say a lot of things, a lot of videos, anything that you can find useful on the internet, you put it in one book, and that's this book. And
Yeah.
that's called
That's
Option
awesome.
Volatility and Pricing: Advanced Trading Strategies.
Okay.
And that helped me tremendously to understand all the concepts around option pricing. What is the Black-Scholes model?
Yeah.
How do we determine implied volatility? What does it mean?
Mm-hmm.
What has historically happened? There's all of this in this book. And honestly, I'm not affiliated in any
Yeah.
way to
Yeah.
that book, but it just helped me a lot. And if it can help like someone, that's what I would recommend.
Awesome. Yeah. I'll add a link to that in the show notes too, so people can check that out. So option volatility and pricing. You said right?
Yeah,
Yeah.
written by Sheldon Natenberg. Yeah.
Cool. Yeah, that's good. I know when I got into options, I mean, there's so much information out there that it's not a complicated thing when you get to know it, but there's a lot to it. You know what
Yeah.
I mean? I think for me the biggest thing was just because I was trying to learn so much that it was just like it was scary jumping in.
Yeah.
And for me the biggest thing was just getting in and doing a trade, and a small one, but just doing a trade and seeing how it worked, how the mechanics worked, and
Yeah, you
that
need
really
to get
helped.
used to, something new because you have so many combinations that you can actually do with the options. It's not at all the same compared
Right.
to stock trading
Oh
as
yeah.
we hear it in general. And this is much more complicated because you do not only have a lot of strikes possible, you also have expirations, and you also
Yeah.
need to take into account the time decay, the volatility, and
Yeah.
that's why honestly it's so hard to lose yourself and to start, watching videos about dudes, who doing calls and everything. I mean, nothing wrong about this, but it's not, for me at least. I knew that I needed to find a valuable sources. That's why this book helped me a lot. And I'd say also YouTube and watch Tasty Trade and consume everything.
Yeah, Tasty Trade's awesome. I love watching their stuff.
Yeah, honestly, if you have like 10 minutes to spare like every day, you watch like one market measure. I think that's how they call the segment.
Yeah.
And honestly, that's the great education for free.
It is, yeah. And I love you. I mean, you can literally email. I've emailed them a couple times, and they'll respond. I'm not even a client of theirs. I don't use Tastyworks, but you can email them, and they'll respond and give advice as far as they can. They won't tell you what to do, but as far as mechanics, how they work, and they respond pretty quickly. I was shocked. So they're really dedicated to education.
Yeah, I had sent an email to know if it was possible to put a stop loss on a spread overall, as you do, for example, a sell to open with a limit order. I was wondering if you could do like a sell to close with a limit order on a spread. Right. And they told me, and they answered actually quite quickly, and they told me that, it wasn't possible. But I was impressed that they answered quite, quickly, and it was like a detailed answer, and that was nice.
Yeah, it's really cool. And I like, what you're saying too about, where you get your advice, I think is really important, because there are so many people on Twitter, on Facebook groups, where you'll get these hyped up stocks or people talking about, massive unreasonable gains. And I think that's the biggest thing, like, especially right now, staying away from those sorts of sources, or just being really careful, because I know that I got mixed up in that for a while at first, and it was a rude awakening when I realized, like, hey, that's not actually reasonable, to have.
Yeah, that's I think that's always been like this, even before Facebook groups and everything. It's always been, the stock market always had this image of you can get rich quick, this type of things, but I think that's normal to I've been through this same, like, I thought it was normal, as I said, to make 2% a day on your account or something like this. Yeah. And I thought that it was something that was like consistent, but after that, you lose and you learn and you see that it's not like this. And, the returns that you see, like 30% are great returns. They are not like low returns. They are very good returns,
Oh yeah, definitely. It's just, it can look, the actual returns in the real world can look low compared to what people promise.
But honestly, that's a fair, question I think that people can have, is that if I can make 1,000% right now on the stock, how come, that big companies are doing only 30%? And, if they actually did this and they had like a good trade and they actually doubled their account in one trade, that's a fair statement. The thing I think to really understand is that on the long term, it's gonna average, and general, like, it's gonna average and you're gonna lose, or at least not stay at 1,000%. But yeah, honestly, I really also wonder the same thing. But after that, you lose and you understand that the risk is there.
Yeah, exactly. And there's always risk. And I always say on this podcast that, like, you have to be willing to take the risk, like, to lose everything you put into a trade, because there's no guarantee of winning. It could look like the most promising trade ever, and you could still lose. I've had trades I put on where I'm like, this is definitely going to work, and then it falls apart and it doesn't work. And losing is definitely a real part of the process.
But I think that's normal. It's a bit like any business. You have to pay. You have to go a bit. You have to do one step back to move forward. That's right, and exactly. I felt that's a bit the same when for example, when I had the Cisco trade, where I had like quite a big loss, and after I could actually roll out. But I considered that as the expense of the trading, in a way. Like, there was a business cost, and like, that's how I feel a bit more comfortable about when I have losses. But yeah, honestly, it's true that it would be better if you could have less losses, obviously. But that happens.
Yeah, definitely. One last thing that I think has really helped me, and I think it depends on how serious someone is. Some people, like you said, only want to get in and maybe save a bit extra, But if someone's really serious, like, what I find has really helped me is just learning how the economy works and how that works with the stock market and how the two kind of feed off each other, and what, especially right now with the Fed giving so much liquidity, like what that even means, and what that, we have all these numbers being released every week. And I found at first, like, it was really confusing. Like, okay, well, I get that, but what does that matter? Why do people care about it? But, I've been studying for the Series 65, and so I've had to learn a whole ton about the economy and the Fed and monetary policy and all this stuff. And I found that it really helps to kind of put everything in context. Like, okay, this is why these things are happening, or this is how the economy affects the market and how the market affects the economy, and so on. And that, I think, for someone who's really serious, who really wants to get a deep understanding of like what's going on and why the market does what it does, that can really help. I found it's really helpful for me.
I think it's also going to help along the way when someone is going to try to build a portfolio of positions, or at least start trading, and when they're going to see, I don't know if you remember what happened with USO and all the oil-related products.
Oh yes.
And if you don't know what you're trading, that can lead to situations where it can be very, very dangerous. And it was the same for the volatility products. I think it was ZIV that had been taken out because in February 2018 it had lost like 95% of its value, and some people were short, and that was, that's crazy to think that that's already on the market, and people are allowed to short it and everything, because that's that can go far, that can go wrong.
Oh sure, yeah, you definitely have to understand what you're trading. The stuff with USO was insane.
That was mad.
That was nuts.
That's why I think something that helped me quite a lot when I was learning is, as I said, learn from book, and then after that, choose what you're gonna trade, quite carefully. I mean, build a watch list of securities, but like know them, make sure that you don't trade something that is like shady, or something that is going to have a pump and dump or anything. I mean, that's not going to bring any good on the long term, and it's better to trade like market leaders, even though that requires maybe more capital. But honestly, like when I had like this someone asked me, what is the minimum you should think I should have, and I said, honestly, if you don't have, I'd say 2,000, 3,000 minimum, it's not even, don't think about it. Because, you take more risk, and you actually do a disservice to yourself by starting with less, because the losses are so big, relative to the account, to the account size, that you're going to get burned even if you're good, because just a series of bad luck, and you could actually burn really bad your account.
Oh, sure. Yeah, it's hard. And it's, with like a $1,000 account or something, you figure the best you can do is still going to take up, even if you do a defined risk with like a dollar wide strikes, you're still going to take up 10% of your account just with one trade.
And obviously when you trade, I mean, that's personally how I felt when my account was a bit smaller, is that you make your trade, but after that, for the next 20 days you can do any trade, because all the margin is already taken. And if you want to follow a 50% roll, for example, that's going to be super annoying, because you have to wait the 20 days until you trade, or at least you potentially close your trade. And if you have to roll it out, then your whole account is being held on margin.
Yep, exactly.
So honestly, I think $2,000 minimum is like something that should be done. It's crazy when we're in the Facebook groups and you can see some real bets being taken, and when it works, great, that's dangerous. That's really dangerous.
People say, oh yeah, I started with $50 and now I'm worth $800. It's like, okay.
Yeah, I mean, that's great, honestly. Like that's cool if people make money, but it's just, it can go so wrong. And obviously if you go from, if you increase your account too fast, it means that you're taking a lot of risk somewhere.
Right.
And that's dangerous. That can go wrong on the long term, and it always happen. That's really Murphy's laws in the stock market. Whatever you think that can happen, it can happen. Like the worst crush.
Right. Well, that's why they're called black swan events. No one sees it coming. You know, I liked on Tasty Trade. I heard this the other day where they said, you know, if we could see it coming, it would already be priced in.
Yeah.
You know, like efficient markets. You know, if we could see it coming, it would already be priced in. So you're never going to see it coming. That's the point.
That's the point. But after that, there are ways you can prevent at least the effect is.
Yes.
You know, you just buy a bunch of, I mean, not a bunch, if you buy,
sorry, my dog.
when put contract on the SPY, and I don't know, for example, you take it at a strike of like 300 or something, and that provides an insurance in case if the market starts dropping. You know, that's something that I was thinking about of also doing more is at least even if the market crashes, you have that insurance. That, yes, you have to pay every time, but at least it can protect you.
You can protect yourself. Yeah, that's good advice. So, yeah, that's awesome. Any last thoughts you want to leave with people?
Yeah, I mean, I hope that everyone does what they think is good for them in the stock market, and just being careful and
that's
being careful.
Thing. Protect your
well, enjoy also having fun doing it, because this is also a lot of fun. That's why, you know, it's cool in the first place.
It is, yeah. It's a lot of fun for the right people. I know for me, it's I love it. Even if you lose,
yeah.
I mean, it's really fun.
And you have to. I feel like you kind of have to love what you do.
Yeah, you really do.
100%.
I think
if you don't like it, that's not gonna work, because you know, even if it pays, when it's stressful, it can be so stressful that I think it could discourage a lot of people that just don't love it.
Right.
Even if it pays, because when it goes wrong, it goes so wrong that it
really tests you. And there's no shame in that. Like I always tell people, if you can't stomach options, like that's fine. Like if you don't want to put the effort to trade that and deal with the losses, then do ETFs, do index funds, do your basic long buy and hold strategies, whatever. Like
definitely, and
trade small for different people. Yeah,
trade small. Honestly, this is really the biggest thing. This is like once you need to go too big to understand how important it is to stay small. But when you're too big, that just hurts so much that you don't want to do this. And after that, when you come back to a small contract size, it becomes very, very pleasant, because you're just only left with trades that you can roll. So
exactly, it doesn't matter so much. Yeah, that's awesome. I really appreciate you joining us. This was a lot of fun. And hopefully we can do this some other time again. Cause I think.
Thank you for having me. That was great.
Yeah, it was really informative. So I appreciate it, and I think this gave a lot of good information to people. So, like I said, I'll definitely give link in the show notes to the book you recommended and any other resources that come up. So
looks like Brandon will be reading this book.
Yeah, it sounds interesting. Yeah, definitely. So thank you so much for joining us.
Yeah, this was
Thank
fun.
you very much for having me.
Thanks. All right, so I hope you enjoyed that discussion. That was definitely really interesting. I think, like I said, it was still really relevant to what's going on today, even though it's not exactly the same conditions. But honestly, I think the market's pretty much around the same point as it was when we had the discussion. So,
yeah, really.
Not too much else going on. But actually, we're hoping to have Jean-Christophe on a bit more often. He might come on as a co-host, whether every time or at least periodically, we're not sure. But we both had a lot of fun with the discussion, so I think that would be really cool. So I will put the links to those resources that he recommended in the show notes. If you want to check out the show notes, you can go to possiblepromise.com/16. And you can read the show notes there, and also just leave a comment if you want to let us know what you think of what we talked about today. That'd be awesome. So with that, we will see you probably in a week for another episode of the Possible Promise podcast. Thanks, everyone. Bye.
Bye.